Hi guys, welcome to Crypto Insight. In these videos, I give you a rundown of what's happening in large cap crypto, and in particular, the options and volatility space. I started trading crypto options in 2020 after spending 20 years trading equity derivatives professionally. It's been a lot of fun trading the massive volatility in Bitcoin and Ethereum. And I can tell you as a vol trader, the markets with the most opportunity to make money are those that know how to move. I will give you the insight of my trading and experience and how I'm reading the options market flows and positioning my own book to trade the opportunities in the space. Don't forget to like and subscribe to the channel if you like these videos, and hit the notification bell to see these weekly videos as they are released. Thanks a lot and enjoy the video. Okay, so let's talk crypto. So big week in crypto. So we look back at what we looked at last week. We had been chopping around in the triangle. We exited the triangle. We tested the major support at 29 again, and we had an almighty bounce. Now we've been looking at on-chain metrics to kind of suggest, well, that had been suggesting that, you know, the hodlers were comfortable. They were taking their coins off exchange. You know, there were various signs that the underlying market wasn't as bearish as maybe the price action was showing. You were also seeing momentum indicators not collapsing as we retested those lows, right? So, you know, it's one of those things, some potential signs of a bounce may be coming. But the break was possible as well. And I was saying if the break happened, I could see a fast acceleration to 20. The break didn't happen, right? So I'm pretty happy the break didn't happen, and we've got a nice reaction there. The big level really on the upside was 35. And for a tactical, once we broke above 35 on sort of Sunday night, that was your kind of cheeky, you know, buy the break type level. And you know, by the time you woke up on Monday morning, we had actually tested 40,000, right? So that was, you know, there was a fair amount of shorts in the market that were being liquidated as we broke that 35, 36 level, basically, right? And so there's various websites you can use to track that. Bybit is one of them, but the numbers basically were something like $950 million worth of crypto shorts were liquidated, basically, as the market rallied there. Now, the kind of trigger for the short squeeze, some people are saying it was this unverified article that Amazon may accept Bitcoin payments by the end of the year and even start their own token. But then they came out and specifically denied that. Now, that doesn't mean they're not going to do something like that in the future. And it makes sense for one of the biggest networks in the world to issue some kind of Amazon token is a bit of a no-brainer, and they probably will at some point in the future, right? So it's not that far-fetched, but that was kind of that's what lit the match. And then you had this kind of short base that needed to be squeezed out, and that's kind of what happened, right? Now, you've also had a Bloomberg report on the Tether investigation, which has been ongoing forever, right? Which we've been talking about. The story's obviously been getting more airplay over the last few months. That probably helped kind of the short base building in Bitcoin, as people were thinking this Tether thing's gonna lead to more weakness in the crypto market. But you know, in the end, it seems like it was quite the opposite, right? Now that that's out on Bloomberg and everyone knows about it or whatever, that seems to have triggered the opposite and a rally. Kind of the opposite of buy the rumor, sell the fact kind of thing. There is a theory going around that maybe people are dumping their Tether and switching into Bitcoin, which is creating a Bitcoin bid. Personally, I think that's a bit far-fetched, just because who's going to switch a stable coin into a 100 vol coin, right? It doesn't make any sense. The whole point of a stable coin is your money is safe and secure and the value of it doesn't move too much while you wait to see what to do with it. Are you voluntarily going to switch that into something that moves on 100 vol? seems a bit far-fetched to me, right? Certainly for anyone who understands risk. Now, switching to other stable coins, yes, of course, that is an alternative, like USDC or wherever it may be. But I think there might be some regulatory hurdles. Not everyone can do that. It's not as easy as people to switch into those other stable coins. So who knows, right? But basically, the short squeeze was the main thing that's kind of being blamed for this. And you definitely had signs of a lot of shorts being in the market. If I share this diagram. So this kind of shows you the perpetual futures funding rate. So when it's positive, it kind of means that there's a bias for kind of people being long the perpetual futures, and i.e. leverage longs. Or if there's a negative basis, i.e. there's a negative funding rate, then there's more shorts in the market. Basically, they're willing to pay to be short. And so, that's what you saw. You saw a fair amount of shorts there in that kind of red, that negative red there that you can see. And that means that there are some shorts to be squeezed there, basically. Yeah. You've also got another metric that I saw off the on-chain stuff, which is the spent output age. So basically it's looking at, of the coins that are being held, are they being spent on this rally, for example, right? So the idea is on this 10,000 point rally, are any of the older coins being transacted on chain? And it looks like the data is suggesting no, right? So people who are hodling and holding, or have been holding for a while, are not in no rush to start selling up $10,000 in price, right? They're probably in it for a much bigger move, maybe a move up towards 80 to 100,000 is probably more realistic for a point where they'll be willing to start selling stuff, right? So nothing from the on-chain data really suggesting that this is going to be a short-lived rally and going to find loads of selling pressure, basically, right? So in terms of technicals, I think you could probably use that break level of about 35, 36 as your support level now. The big level to overcome on the upside is around 41, 41 and a half. If that breaks, then, we got some serious upside again, and people are going to start getting excited. For now, we're probably going to consolidate a little bit between 35 and 40,000. If 35 fails to the downside, given that a load of shorts have been liquidated, that there is risk that we then collapse straight back down to the lows again, right? Because there's no shorts in the market. And taking shorts out of the market means you take support out of the market, basically, right? So if there's some major negative driver that comes out, we could just as easily see a rollover in this thing. So kind of mind your eye on that. And if you have managed to buy the break and get long, I would run some trailing stops on that, because there's definitely a risk of a rollover. Yeah. Okay, that's kind of where we are in spot. In terms of vol markets, obviously on the rally, realized vols had a bit of an uptick. So you can see here, realized like sort of a week ago was at around 40 on a 7-day. That's popped to about 80, 85 now, as we had that really sharp move higher. So it shouldn't be a major surprise there. In terms of vol, that's a bit more interesting. It's been quite an orderly move in vol. So if I bring up, where the vol curve was a couple of days ago, where it was a week ago, where it is today. So you can see here, a week ago, it was kind of a little bit inverted. That was when we were testing those low levels again. People were nervous of a potential break. Curve was quite flat from about August onwards. And then you had the curve collapse into contango. And then on that latest break, so 2 days ago, we were at the purple, so very steep contango with the front down at 67 or whatever. And then you've had a pop in that front end, right? So you've had 30th of July, 6th of August, all go into the low 70s. The rest of the curve not going up that dramatically, only a couple of vol points. But that front end having a little bit of a pop, but still in contango. Yeah. So that pop in the front has been actually driven by call buying, right? So on Friday, sort of towards the back end of last week and maybe over the weekend, you had some 30th of July and some 6th of August call buying to play the break higher. And that made that front end pop by about 6 or 7 vol points, right? And that's kind of the reason why you had that move up to the green and where we are now. Yeah. Which kind of makes sense, right? I mean, the vol had got quite depressed and was quite cheap. So quite an efficient way to play a potential technical break was to just buy those outright short dated calls to get leverage and get some exposure to like a sharp rip. But the thing about those options is if you get your move to 40,000, you probably need to be pretty quick to take profit because those things are going to decay pretty fast as well. Yeah. But the area that they were buying was kind of the mid 30s area. So if you do go to 40, then actually you just go in the money by 5,000 points and your decay bill is actually quite low. So you're not in a mad panic to sell it, right? You just need the market to kind of hold up there because you've gone through your strike. What else has been going on? Skew wise, again, pretty unsurprising what's going on in Skew, a shift towards the calls. So we've got 7-day Skew, 30-day Skew. We can kind of bring up last 3 months. So you can see, you know, the Skew had been more for puts in the short dates. It's kind of got much closer to zero now. So a much more symmetrical volatility surface, even in the super short dated options. And that's again, because you had that call buying come in and kind of elevate that call side back up to be kind of equal to the puts. Yeah. Now I had said that I thought the 20,000 puts in the front end, those deep downsides, I thought they were too cheap in terms of vol, right? And ironically, this is something you need to be aware of, and I thought it was quite interesting. Now, I thought a break below 28,000 was going to trigger a move up in those puts because I thought 100 vol on those puts was too cheap because we were going to go more to 150. What I forgot to mention was if the market breaks higher, that's also good news for those options, right? So if you look from a week ago, we go here, you've got those 20,000 strikes were trading on 100 vol. As we've rallied, those 20,000 strikes are so deep out of the money now that the implied vol on them has gone to about 120 because of the way the surface shape works, because of the way those wings trade at such an elevated, because of that smile and that convexity of that surface. What can happen when you buy those deep downsides is a rally in the market, provided you did it from a vol trade perspective, not as naked puts, but if you delta hedge them, for example, then the vol on them works in your favor. And that's exactly what has happened here in those. So quite interesting. I thought that even on a rally, those 20,000 puts have performed very well in terms of their vol. Yeah. And then, yeah, I mean, the last thing I was just going to show was, you know, the Skew, the guys at Skew are quite good. I mean, you can probably find this in some of the other sites as well, but you know, here it kind of shows you where that activity was in those calls. If you want to see the exact, you want to pinpoint the exact strikes that were driving that flow. I've got it here. So top Bitcoin options, you know, that got bought as we were rallying 650 lots of the 30th of July 33s. The July 34s were also bought, and the 6th of August 35s, 34s and 36s, right? So if you look at all of those options, you know, the speculation is that it was kind of all one buyer just splitting their shapes, splitting their strikes and maturity up a little bit. But the total number of options there is pretty decent, right? You're looking at best part of, what is it, nearly 3,000 options on Bitcoin, which in terms of notional is pretty chunky. Yeah. So that's kind of it really. And then, you know, lastly, Ethereum obviously has been rallying in sympathy with Bitcoin, not really keeping pace as you would like, but it makes sense, right? If the catalyst was more the short squeeze in Bitcoin, then not a huge surprise. Obviously, it hasn't left it completely behind. You know, it bounced off its key level at 17. It's got a resistance at 24, which seems to have contained it for now. We look at the spread chart. The spread chart's kind of, you know, a little bit softer as Bitcoin's accelerated, but it's not breaking the support level just yet. So no reason to panic on Ethereum just now. Also, no signs of its EIP 1559 upgrade doing anything particularly positive just yet. So still remains to be seen if that's going to do anything and give us any fireworks. But for now, it certainly hasn't shown that. And then the vol space, nothing really that interesting to report in there, right? So in terms of the vol space, if I have a look at the vol spread, so you've got the front end. You've got front end September at around 80 vol and August at 76 in Bitcoin. And in Ethereum, you've got, what have you got? September 96, August, pretty flat curve there. If you see the term structure, much flatter than what we see in Bitcoin. 94, right? So you've still got a pretty hefty vol premium, 15 to 20 vol points between Ethereum and Bitcoin in that front end. So people still seeing event risk in Ethereum, even though the rally in Ethereum hasn't really outperformed so far, people still seeing event risk there basically, right? And if we look at the final thing that we like to keep an eye on is the old max pain, because we have got expiry approaching this week. So this Friday, we've got the July expiry. We can bring up open interest in July, see where we are. So Ethereum showing 2200 max pain, and open interest kind of peaks 24, 25 and 3000. So fair amount of open interest there in the 24 and 25 area. If we go to Bitcoin, same story, open interest by July, max pain at 35. Right, which is interesting, right? Because we popped up to 40 and we're getting dragged back down again, right? So the question is the max pain going to contain us before Friday and then we get our next leg higher after that, right? That's definitely the type of price action we've seen historically when there's been a big expiry and we've been in the vicinity of the max pain. It tends to keep us there and then afterwards we fly, right? So we've got pretty big strike at 35 and 36. We've got a big strike at 40 as well, and another one at 45. But based on that, if the options market is going to have an impact, there's a fair likelihood we're going to stay between 35 and 40,000 into Friday, right? So I wouldn't be overly surprised for that to be the case for the next few days. And then if we want to rally, maybe the rally comes sometime next week. Yeah. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up and hit the notification bell so you don't miss out on future videos. I'd also encourage you to sign up for a free trial to our live and interactive Macro Insight Zoom call. As part of our trading community, as well as the call, you'll also get access to our Telegram chat and our weekly market reports. To find out more, you can also connect with us on the socials. All the links are at our website, www.options-insight.com. Thanks.